Welcome back to the channel. I'm Algabot, and today we're studying an expert advisor for MetaTrader 5 called Impulse Hook Continuation. This is a pure price action strategy built around a classic idea from the trader Joe Ross, the first small pullback that appears right after a fresh momentum breakout, often called a hook. Instead of chasing the breakout bar itself, this approach waits patiently for that first shallow pause and then looks to join the trend as it resumes. By the end of this educational walkthrough, you'll understand exactly how the logic works, how it reads the chart, and how it manages its exits. Let's get started. Let's frame what this expert advisor is actually trying to do. Impulse hook continuation is a trend continuation system. The core belief behind it is simple and time-tested in the study of price behavior. A genuine trend rarely reverses on its very first correction. When price thrusts strongly out of a base and posts a fresh directional impulse, the first shallow pause where it fails to push further is usually just short-term profit-taking. The traders who miss the initial move are often waiting to join on that dip. So rather than buying the breakout candle, which can be extended and prone to a snapback, the strategy waits for that first hook and then enters only when price breaks back through the pre-pullback peak, riding the resumption of the move. What's notable here is that there is no oscillator, no moving average crossover, no fancy filter. The engine reads only raw open, high, low, and close values. The one indicator it uses is the average true range, and even that is used purely to size the stop loss and to scale the various thresholds so the strategy adapts automatically to each market's volatility. That's what lets the same settings travel sensibly across different symbols and time frames. Under the hood, this is a compact 5-state machine. It watches for ignition, tracks the impulse as it extends, arms the hook on the first failure to extend, triggers an entry when price breaks back through the hook level, and invalidates the setup if the pullback drags on too long or retraces too deeply. We'll unpack each of those in detail shortly. In terms of who this style suits, it's built for traders who prefer structured, rules-based trend continuation rather than picking tops and bottoms. Its natural home is a trending foreign exchange major, a metal, or an index on the 15-minute through 1-hour charts. Remember, this is educational information only, not financial advice, and all trading carries real risk of loss. Let's walk through the exact logic step by step. The whole thing runs once per newly closed bar, so it never reacts to noise inside a forming candle. Step 1 is ignition. The strategy measures the highest high and the lowest low of the prior 20 bars. That's the BreakoutLookback setting. When a bar closes above that prior high, a fresh upward impulse is born, and the machine starts tracking the running peak of that up leg. When a bar closes below the prior low, a downward impulse is born, and it tracks the running trough. This closing beyond the base is what the code treats as a true breakout, not just a wick poking through. Step 2 is extend. As long as price keeps posting new highs in an up impulse or new lows in a down impulse, the move is still running and no hook exists yet. The engine simply updates the impulse extreme. Step 3 is arming the hook. The moment a bar fails to make a new extreme, the first bar that can't push the trend further, that pause is marked as the hook. The impulse extreme becomes the trigger level, and the strategy begins tracking the counter extreme of the pullback, the higher low on a long setup, or the lower high on a short setup. Step 4 is the trigger. If price then breaks back through that hook level by a small buffer, the break buffer ATR, a fraction of the average true range, the trend is judged to have resumed, and the EA signals an entry in the direction of the original impulse. On a long, entry is at the ask. On a short, entry is at the bid. Before entering, it checks that no position is already open on this magic number and that the current spread isn't wider than the max spread points limit. Now the exits. The stop loss is placed just beyond the pullback's counter extreme, with an extra half ATR of breathing room from the ATR stop multiple setting. The distance from entry to that stop defines the risk, and the take profit is set at a fixed multiple of that risk, the RewardRisk parameter, which defaults to 2 to 1. Finally, step 5 is invalidation. A hook is by definition a minor correction. If the pullback drags on beyond max hook bars or retraces deeper than MaxPullbackAtr times the ATR, the impulse is considered failed, the setup is discarded, and the machine waits for the next ignition. A brand new opposite breakout also flips the whole machine around. Let's read through the MetaTrader code on screen. At the top are the inputs. BreakoutLookback of 20 is how many prior bars a close must clear to ignite an impulse. MaxHook bars of 4 caps how long the pullback may last. Break buffer ATR is the small buffer beyond the hook level, expressed as a tenth of the average true range. MaxPullbackAtr limits how deep the retrace can be. ATR period sets the ATR lookback. ATR stop multiple gives half an ATR of stop breathing room. And RewardRisk sets the take profit at twice the risk. Now the long block. Once a hook has been armed, the condition checks whether the current bar's high has climbed back to at least the stored hook level plus the buffer. When that's true, the trend is resuming. The entry price is taken at the ask. The stop loss sits below the pullback extreme, minus that half ATR of room. The risk is entry minus stop, and the take profit is entry plus the reward to risk multiple of that risk. Then trade.buy places the order with those stop and target levels attached. The short block mirrors it exactly. The condition checks whether the current bar's low has dropped back to the hook level minus the buffer. Entry is taken at the bid. The stop is placed above the pullback extreme plus the half ATR of room. Risk is stop minus entry, and the take profit is entry minus the reward multiple of risk. Then trade.sell submits the order. Both sides self-scale with volatility through the ATR. Let's walk through this illustration candle by candle and watch both a long and a short setup unfold in sequence. Keep in mind this is a simplified educational example, not a real trade. On the far left we have 3 quiet bars drifting sideways in a tight base. Nothing is happening yet. The strategy is simply measuring the highest high and lowest low of this recent range, building the reference it will need for a breakout. Then the 4th candle changes everything. It's a strong bullish bar that closes decisively above the top of that base. This is ignition. A fresh upward impulse is born. The engine starts tracking the running peak of this up leg. The next candle pushes even higher, posting a new extreme. So the impulse is still extending and no hook exists yet. Now watch the 6th candle in our count, the one right after that second push. It tries to continue but fails to make a new high. Its peak stalls just under the previous one. That failure to extend is exactly what arms the hook. The strategy locks in that prior peak as the trigger level. You can see it marked by the upper dashed line on the chart, and it begins tracking the shallow higher low of this pullback. This is the patient part. We are not chasing, we are waiting. On the very next candle, price snaps back up and pushes through that hook level by the required buffer. That's the trigger, and the buy entry marker fires. The stop loss is tucked just beneath the pullback's low with a little ATR breathing room, and the take profit is projected at twice that risk. Price then runs cleanly higher into the next candle and tags the take profit target above. The long idea is complete. We joined the trend on its first hook, not on the extended breakout bar. Now the market rolls over, and the second half of the chart sets up a mirror image short. After the peak, a couple of bars form a small ceiling and price begins to slip. Then a strong bearish candle closes below the base of that little top. That's a fresh downward ignition. The machine flips direction and starts tracking the running trough. The following bar drives to a new low, extending the down impulse. Watch the next candle carefully. It fails to make a new low, holding just above the prior one. That failure to extend arms the hook on the short side, and the strategy stores that impulse low as the trigger, shown by the lower dashed line. It now tracks the lower high of this bounce. On the following candle, price breaks back down through the hook level by the buffer, and the sell entry marker fires. The stop sits just above the pullback's high with its ATR cushion, and the take profit is again projected at the 2-to-1 reward to risk distance below. The final candle sweeps lower and reaches that take profit target. So across both trades the pattern is identical in spirit. Wait for a genuine close-based breakout. Ignore the initial thrust, let the first hook form, and only act when price breaks back through the pre-pullback level. The stop protects the idea if the hook turns out to be a full reversal, and the fixed reward to risk target defines the exit in advance. Of course, in live conditions many hooks fail. Price can slice straight through the stop, and losses do occur. That's why the invalidation rules and volatility-based stops matter so much. That brings us to the end of our study of the Impulse Hook Continuation Expert Advisor. We covered the economic idea behind the Ross hook, walked through the 5-state machine from ignition to trigger to invalidation, read the actual MQL5 entry code for both the long and the short side, and traced a full example on the chart. Remember that everything here is educational information only. It is not financial advice, not a recommendation, and not a solicitation to trade. All trading carries real risk, and losses are a normal part of any strategy. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe so you don't miss future walkthroughs. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.